Welcome to the Deep Dive. We're cutting through the noise to bring you the essential insights from the latest earnings calls.
That's right.
Today, we're diving into the first quarter 2025 results for BZUN, ticker BZEEI, based on their recent call.
Yep. We've listened in, gone through the details.
Think of this as your shortcut to understanding what's really driving this business right now.
Exactly. We'll pull out the key takeaways for you, headline figures, the strategy shifts, and what they're seeing with that big 618 campaign that's happening now.
Okay, let's unpack this then. Looking at the top line for Q1 2025, BZUN Group reported total net revenue, what was it, 2.1 billion RMB?
Yeah, 2.1 billion RMB, and that's up 4% compared to the same time last year.
Okay, 4% growth. Seems okay.
Well, the overall growth is positive, yeah, but the real story is where it's actually coming from. You see, their e-commerce segment, BEC, they call it revenue, was pretty much stable, largely flat. Yeah, around 1.7 billion RMB. But their brand management segment, BBM, that one really accelerated. BBM revenue hit 387 million RMB. That's a massive 23% jump year over year.
Wow, 23%.
That segment's momentum is, I think, a really crucial point from the call.
Absolutely. So stable e-commerce, but booming brand management. How did that play out on the profitability side?
It's a bit of a mixed picture, you know. It really reflects this strategic transformation they keep talking about.
Right.
In BC, the e-commerce part, they actually saw an improvement in gross margins for product sales, up 130 basis points to 15%. Management said this was mostly down to changing the mix of products they're selling. Diversification.
That's interesting, improving margin even with flat revenue.
Yeah.
I thought you said the BBM segment saw a slight dip in its margin.
A small one, yeah. BBM's blended gross margin was around 52%, just a little lower than last year.
Why was that?
They linked it to changes in product offerings and optimizing commercial plans, especially for the GAP brand, apparently.
Okay. And the overall bottom line, still showing a loss.
Yes, they reported an adjusted operating loss of 67 million RMB for the group. But importantly, they pointed out this figure included about 80 million RMB in restructure costs.
Restructure costs. Related to what?
Human resource reform, they said. So you could see it as a planned investment in efficiency that hit the bottom line this quarter.
Right. So maybe the underlying picture isn't quite as bad as that headline loss suggests.
Well, yeah, look at the segment detail. Despite that slight dip in its gross margin, BBM's adjusted operating loss actually narrowed quite significantly.
By how much?
By 28% year over year, it came in at 21 million RMB, so much better performance there.
Okay, BBM loss narrowing. What about BEC?
BEC, the e-commerce segment, its adjusted loss actually widened a bit to 46 million RMB.
Why was that?
Management put that down to a few things. Q1 being a seasonally slow period for e-commerce, those personnel adjustments we mentioned, and some ongoing strategic investments within BEC itself.
Okay, got it. So despite the overall group loss and those specific BEC challenges this quarter, the feeling from management was still progress.
Definitely. They really highlighted the acceleration in brand management, BBM, as a key positive sign. Proof their strategic transformation is gaining traction, you know. Even with the tough macro conditions and the usual Q1 e-commerce slowdown.
Right, and they mentioned something about their anniversary.
Yeah, 2025 is their 18th anniversary. They framed it not just as a birthday, but kind of a strategic milestone, symbolizing renewed energy and a really sharp focus on long-term value creation through this pivot.
Let's delve deeper into that strategic transformation then, because it really sounds like it's touching everything they do, diversifying revenue, getting sharper operationally.
That really is the core story, isn't it? The 4% group growth, the stable BEC, and that huge 23% BBM acceleration. Those are the results of this effort. For BEC, the focus isn't just about scale anymore.
It's about
quality development, they called it, delivering higher value generation for their brand partners.
And how are they actually chasing that quality and value in BEC? What does that mean in practice?
Well, it involves things like pushing omni-channel solutions for brands, really boosting their content creation capabilities, and seriously leveraging tech. AI came up quite a bit.
For efficiency, I assume.
Exactly, driving efficiency. They were quite clear this focus is setting them on a path for margin expansion in the BEC segment over time.
Okay, so BEC revenue flat year over year, but they're making these structural changes underneath for future profitability. You mentioned improved margins in BEC product sales earlier. How does that fit in?
Yeah, that's a key piece. So total BEC revenue was flat at 1.7 billion RMB. Right.
Right.
But revenue specifically from product sales within BEC grew by pretty healthy 7.3%.
Okay, what drove that?
Mostly new categories doing well, things like home and furniture, alcohol, health, and nutrition. And it was this growth in these specific, maybe higher margin product categories that drove that 130 basis point improvement in the product sales gross margin.
Ah, okay, so the product mix strategy is actually working there.
Seems like it, yeah.
Got it. Product sales growing and becoming more profitable. What about the other big piece of BEC, the service revenue?
Service revenue was largely flat year over year, around 1.3 billion RMB. But again, they stressed these structural mix changes aimed at quality.
Yeah.
Meaning within services, their online store operations revenue actually grew nicely, up 12% year over year.
Driven by anything specific?
Yeah, particularly luxury and apparel brands, and also their progress on omni-channel initiatives.
And they called out specific platforms where they did well, didn't they?
They did, yeah. Mentioned double-digit revenue growth on JD and really strong triple-digit growth on Red Xiaohongshu.
Red.
Yeah, apparently they've just been nominated as a first batch partner there too. So it suggests they're succeeding in diversifying where they operate within that online store service part of the business.
Okay, so growth in online store ops and product sales.
Yeah.
But the overall BEC number was flat. So where did things contract?
They pointed to a couple of areas. Warehouse and logistics services saw a mid-single-digit decline, primarily due to less volume from some specific sportswear clients, apparently. And digital marketing and IT services also saw a similar mid-single-digit decline.
Okay.
But they framed that second one, the digital marketing and IT dip, as more of a deliberate choice, prioritizing higher value-added marketing, optimizing performance marketing spend, rather than just chasing volume.
So it sounds like a strategic trimming, focusing on profit over sheer size in certain service lines.
That's how it came across, yeah. And they are also actively trying to build up other areas like B2B logistics, return and reverse logistics services, plus targeting new segments like outdoor and FMCG for their warehouse operations.
Right, trying to fill the gap and find more profitable niches.
Absolutely. It's a tactical pivot, reshaping BEC for efficiency and future margin expansion. They also made a point of highlighting some awards they won in Alibaba's marketing ecosystem, Arimam.
As validation.
Yeah, validation of their innovation in content creation, another piece of that value-add focus. The overall message for BEC in Q1 seemed to be very deliberate execution. Scaling profitability where they can, using tech like AI to get leaner, more agile.
And this fits with their bigger plan.
Yes, they said it aligns with their annual plan's goal of making BEC a profit center, even with the adjusted loss this quarter, which, remember, had those big restructure costs baked in.
Okay, let's shift gears then to the undeniable bright spot this quarter, brand management, BBM. That 23% growth is really impressive.
It really is, and accelerating too, from 17% growth the quarter before, shows real momentum.
Remind us of the number.
Total BBM revenue was 387 million RMB. Management linked the growth to improvements across the board operationally, same-store sales, traffic, conversion rates.
The store sales were up.
Yeah, 5% for the quarter specifically.
And within BBM, they called out GAP and Hunter, performing ahead of expectations.
They did. For GAP, the strategy sounds very focused. Reinforcing the brand's DNA, leaning into key categories like denim, khaki, shirts, kids and baby.
And localization.
Huge part of it. Balancing the global product assortments with localized stuff that really clicks with the Chinese market. That Forbidden City collaboration they did, fantastic example. Generated 10 million RMB in sales. Highest sales rate they've ever seen for an IP collaboration, apparently.
Wow. That shows the power of getting the local connection right.
Absolutely. They're also expanding channels online and offline, and importantly, optimizing the store network. They closed 4 stores this quarter.
Closing stores.
Yeah, but the remaining ones and the new ones they opened late last year are showing better productivity, higher efficiency, and they actually plan to open over 40 new stores in 2025. About 10 are coming online just in Q2.
Okay, so optimization leading to expansion. And that focus on local relevance, connecting with younger consumers, seems to be working.
Incredibly effective, it seems. It's telling that the kids and baby segment was the highest growing within BBM. Really underlines how vital that local execution is.
And Hunter?
Hunter's also doing well, expanding product offerings, strong sales growth. They've got 3 new stores planned to open simultaneously in May.
And across BDM, the merchandising approach.
Very data-driven, they said. Allows them to be more responsive with product planning, pricing, targeting the right customer segments.
So BBM is growing fast, showing improved profitability. That adjusted operating loss narrowed by 28%, you said.
That's right. The gross margin might have dipped slightly to 52%, but disciplined cost management, better unit economics as they scale, it all helped narrow that operating loss significantly, down to 21 million RMB.
And management sounds confident about this segment.
Very. They stress the partnership with Gap Inc. is strong, and they have clear visibility on double-digit top-line growth for BBM for the full year 2025.
And here's where it gets really interesting for me.
Yeah.
Management actually put a stake in the ground, didn't they, about BBM's profitability?
They did. They stated they are aiming for the BBM segment to reach a break-even point in the last quarter of 2025.
That's a very specific, tangible goal. Quite bold.
It is, and it definitely signals confidence in their ability to turn that growth into actual profit relatively soon.
Okay, let's shift to some of the Q&A insights.
Yeah.
The big shopping event, 618, is underway right now. What do they say about early trends?
Yeah, the campaign started early this year, May 13th to June 20th. It's long, 37 days.
And different this year.
Management highlighted changes, yeah. More focus on instant discounts, less of those high spending thresholds we've seen before. And for the first wave, roughly the first 8 days or so, they reported positive initial results.
Like what?
Like pre-sales ramping up well, transaction conversion looked good, and interestingly, they saw lower cancel and return rates compared to last year.
Which is good, right? Suggests more genuine buying.
That's how they viewed it, yeah. A promising sign of real purchasing intent.
Any specific categories doing particularly well early on?
Yes, they called out home appliances and consumer electronics, very strong, partly boosted by government subsidies, apparently. Luxury and fashion apparel also showing strength. They said more detailed results would come later, obviously.
Okay. We touched on the contraction in BEC's IT and logistics services earlier. Did the Q&A add more color there?
It did. For IT, they explained the revenue timing, the cadence isn't always smooth like store operations, which affected the Q1 year-over-year number. But they are seeing more demand for these one-stock solutions.
Meaning?
Using both online and offline inventory together for fulfillment, more brands are exploring this with Baozun's IT team now. They sounded confident that IT revenue growth would pick up again in Q3 and Q4.
And logistics. Still facing headwinds.
Yeah, challenges with those key sportswear clients reducing volume remain. But they're actively supporting those partners while also trying to build out new services, B2B logistics, reverse logistics, and expand into those emerging segments like outdoor and FMCG.
Makes sense. What about bringing new brands into the fold? Are they actively looking to acquire, given the success with GAP and Hunter?
They said the strategy is definitely portfolio-based. They want synergy across brands. New brands could potentially plug into either the BEC platform, for distribution, or the BBM platform for more integrated brand building, product development.
But are they buying now?
They sounded cautious. Given the macro environment, they're holding back a bit on onboarding new brands right now. They do have a strong pipeline, they said, but maybe waiting for better conditions. They are, however, seeing more and more synergies between the brands they already manage and their different business segments.
Okay. Apparel and sportswear were mentioned as doing well in the market generally during this period. Why is that, despite the caution?
Management pointed to really intense competition across platforms, JD, Tmall, etc. That means heavy spending on coupons, instant discounts, especially during big campaigns like 618.
And how are they navigating that?
A key driver for them is using data, really understanding the different consumer tiers, the trendsetters, the quality chasers, the pragmatic ones, the price-sensitive ones, and tailoring everything. Assortments, messaging, marketing, getting the right stuff to the right groups. They expect that momentum to continue through 618 and the year.
Got it. Finally, they talked about synergies between BBM and BEC. How do those two actually work together day to day?
It sounds quite integrated, actually. The BBM brands like GAP and Hunter lean heavily on BEC's services. Things like Tmall Partner Services DP for data, logistics, IT, digital marketing.
Okay.
And for a big event like 618, having both segments gives them an edge. They have more cross-channel info, can measure resources better in advance, react faster to what the platforms are doing. Plus, BBM actually designing and producing products themselves adds flexibility, makes the supply chain more responsive to different platform needs.
Right, makes sense. They also mentioned a new initiative called Red Cat. What on earth is that?
Yeah, Red Cat. They described it as a sort of content-to-commerce project. It directly links content on the social platform Xiaohongshu straight to transaction pages on Tmall.
Ah, So like a direct path from social browsing to buying.
Exactly. It's basically a new channel for performance marketing. And what's interesting is they mentioned some brand partners are already shifting some online performance marketing budget away from traditional in-app search towards RedCat.
Why?
Because they're seeing higher ROI currently, apparently. Now, it's super new, only been open for like 2 weeks, they said. Still in testing with several brands, but management sounded pretty encouraged by the early signals. We'll need to watch that one.
Definitely one to watch. Okay, so taking all this in, what does it really mean for you listening to this, trying to figure out where BZUN stands?
Well, it paints a picture of a company really strategically navigating a complex, challenging market in China.
Right.
They're clearly leaning into that brand management segment, BBM. It's got accelerating growth, and now this tangible path towards profitability laid out. At the same time, they're actively reshaping the bigger e-commerce business, BEC. Focusing hard on efficiency, shifting the mix towards higher margin activities, using tech, even if it means taking those restructure cost hits in the short term.
And the success they're showing with specific brands in BBM, like the GAP localization strategy, the Hunter expansion, that shows they can execute on the ground, right? Leveraging local market knowledge, cultural stuff.
Exactly. That Forbidden City collaboration is a prime example. And the early insights from this huge 618 campaign give you a real-time peek into consumer behavior and which categories are hot right now.
And things like that. RedCat initiatives show they're adaptable, willing to try new things.
Yeah, experimenting with new channels to find better marketing ROI in that constantly shifting social commerce space. Their caution on new brand acquisitions right now also suggests maybe a sensible focus on risk management, optimizing what they have before expanding too fast.
And that clear target BBM break even by Q4 this year provides a really concrete milestone for you to watch. See if they hit it. Assess their execution.
Totally. So overall, the call presents a company deep in transformation. There are definitely promising signs in brand management and a very determined effort to make the core e-commerce operations more efficient and profitable, all while dealing with these shifting market dynamics.
Okay. Let's put on the outrageous but plausible hedge fund analyst hat for just a second here.
Uh-oh.
Given that accelerating momentum in brand management, BBM, and management-specific stated target for break-even by Q4 this year, plus the strategic shifts happening in BEC.
Okay, I see where you might be going.
Here's a thought. Maybe consider going long BZUN, BZEN.
Okay, lay out the logic.
Well, the potential logic is this. The market might be overly focused on that group operating loss this quarter, right? Especially with those big explicit restructure costs factored in.
Okay.
But underneath that, the BBM segment isn't just growing at 22% year over year. Management sees a clear path to profitability within months. That suggests pretty strong operational execution, real market traction with GAP and Hunter.
Right. And you couple that with what's happening in BC.
It's exactly the strategic pivot. Improving those product sales margins, focusing on higher value services, cutting the less profitable stuff, investing in efficiency with AI, the personnel reform. While BEC is stable now, these changes could potentially lead to better group profitability down the road.
Plus those little optionality bets, like RedCat potentially driving more efficient marketing spend.
Yeah. So, look, the outrageous part is definitely taking a bullish stance on a company that's currently reporting a loss. No question.
But the plausible part?
The plausible part is that the market might be missing these inflection points that seem to be developing in the core segments, and maybe underestimating the detailed executed strategy management laid out, particularly for BBM's path to profit.
So it's not just wishful thinking about a turnaround.
It's potentially betting on the successful execution of a specific public plan that's already showing some early positive signs in their key growth engine.
Interesting thought.
Okay, analyst hat off now. That wraps up our deep dive into BZUN's Q1 2025 earnings call.
Yeah, key takeaways for you. That strong, accelerating growth and the clear profitability target in brand management. The strategic shifts and efficiency drive in e-commerce, even with stable revenue. And those useful insights into the 618 campaign and new stuff like RedCat.
And just to be absolutely clear, the trade idea we just discussed is purely for illustrative purposes. It is absolutely not financial advice. We are summarizers, folks, just pulling out the information from the call for you.
We definitely encourage you, as always, to look at the source material yourself, read the transcript, listen to the call, form your own conclusions.
Thanks for joining us for this deep dive. Let us know what stood out to you from BZUN's quarter.